Welcome back to another episode of Crypto in America Live, the only show bringing you candid conversations on the biggest news stories, legal issues, and policy developments shaping the crypto world every Friday at 12 p.m. Eastern. Hey guys.
Hey.
Jacqueline, Gerald, how's it going?
Good afternoon. Happy Friday.
Happy Friday. It's been a long week. Every week is long, but it's good.
Been a busy one.
Where in the world are we today? I'm in DC.
New York.
DC, we're home for the time being.
Yeah.
It's a rare occurrence.
Literally.
All right. Well, we do have a ton to get into today. So let's preview our guests. We've got some powerhouses today. We've got Aptos Labs co-founder, now general partner of Maximum Frequency Ventures, Shaikh, and Chainlink Labs head of public policy, Adam Minehardt, to get into all the crypto blitz developments. I like to call it crypto blitz. That's what I called it in my newsletter this week. We went down on Capitol Hill this week. I don't know. We had a lot, right? We had the roundtables. We had the Fed getting all innovative with payments and their innovative payment conference. And we interviewed Fed Governor Waller. Mm-hmm. And then we had a pardon from CZ. And I think that brings us into the first news story of the week, the top headlines. CZ getting that pardon from President Trump. There's been a lot of commentary around this since the news broke yesterday morning. I don't think it was entirely unexpected if you've been following crypto Twitter and the reporting of my former boss, Fox Business. This is Charlie Gasparino. He actually called this 2 weeks ago. But it's definitely caused some controversy both in the industry and out. Trump didn't seem to know too much about it, though. If you guys saw the clip from yesterday, let's roll it, and then we'll break it down.
The founder of Binance. Can you explain why you chose to pardon him, and did it have anything to do with his involvement in your family's?
Who is that? Because who is that?
He has involvement in your own
the
family's
recent
crypto
one, yes.
business.
I believe we're talking about the same person because I do pardon a lot of people. I don't know. He was recommended.
I do pardon a lot of people.
A lot of people say that. Are you talking about the crypto person?
The crypto person.
Say that he wasn't guilty of anything. He served 4 months in jail, and they say that he was not guilty of anything. That what he did. Well, you don't know much about crypto. You know nothing about. You know nothing about nothing. You're fake news.
Oh.
Let me just tell you that he was somebody that, as I was told, I don't know him. I don't believe I've ever met him. But I've been told by a lot of support. He had a lot of support. And they said that what he did is not even a crime. It wasn't a crime. That he was persecuted by the Biden administration.
Oh, boy.
Yep. Where do we begin on that? I don't even know. He definitely knew who they were talking about, though, because he said the 4 months. He said things about the crimes, etc. The crypto side. But
yeah.
I mean,
I thought it was interesting. Yeah, go ahead, Gerald.
No, I feel like it's hard to take stock in what he says and those sort of like snippets seriously as like part of the bigger picture. There's been, I guess, a lot of sort of cross-pollination between Binance and some of the other sort of entities and initiatives. I know they're one of the biggest exchanges in the world, and CZ. So what's important to remember about this pardon is I think it was actually shout out like Bill Hughes, the general counsel at MetaMask, who flagged this. The personal pardon for CZ as it relates to the criminal activity of Binance does not alleviate Binance from complying with any of the ongoing stuff that they agreed to in order to continue to operate. Right. So they obviously did break a lot of rules. They are still under very close supervision by U.S. law enforcement officials. I think the biggest takeaway from this is that CZ is now able to kind of engage with the U.S. In person. I know you'd have to fact check me on this, but I don't think he's been in the States in quite some time. So it's
he was
actually
in Seattle.
Yeah. So yeah, he was very
for 4
briefly
months
over there. Yeah. But so yeah, I think it's what this is. Jackie, you made a comment in our chat the other day about this, and you said I feel like he won't. And I was just like, that's indicative.
About
like
pardoning Sam Bankman-Fried.
Yeah.
And
so maybe that's just kind of where we're going is just like, if you think it's not possible, it's Kevin Garnett.
Anything is possible.
Yeah. Like anything is possible. So
for better or for worse. Yeah.
CZ, he did do his time for what it's worth. Binance does really proactively engage with law enforcement, and, he's removed from day-to-day operations at Binance. So,
do you think Binance will maybe come back? I know Binance US was an entity or is still an entity, Gerald. I mean, I think they've kind of wound down operations, not completely like exited, but they were kind of laying low for a little while. Do you think we'll see them make more of an entrance onto the scene and maybe start competing with, the Coinbases and the Krakens now that, maybe there's some more legitimacy there?
Yeah, I mean, Richard Tang, who's the current CEO there, has been engaging with the U.S. pretty extensively. Ellie, I think you and I met him at the Digital Chamber Summit last spring.
Mhm.
Well,
So
Richard
yeah,
is the Binance CEO, not Binance US CEO, because they
right,
like
right.
to say that they're separate, which I don't know. Don't sue me. Don't quote me on this, but in my mind, I kind of see them as the same because they have the same name. So
Well, yeah,
Yeah.
so that's a frequent problem in crypto, right? But no, I think Binance is making a big push to get in. US is still biggest, most liquid markets. We're opening a lot of product avenues up, hypothetically, like perps and things like that they previously would have had to just do outside of the US. We talked a little bit last week about kind of this listing fee debacle. So it'll be interesting to see, but they're clearly kind of pushing into the US market.
yeah,
So
there's also
Mhm.
like the side with the Binance listing fee thing that you just brought up, Gerald, that like I had a lot of conversations with people in the industry and they were kind of saying like this might be Binance's downfall. And I was like, no, I really don't think it is. And then some people were like, no, it might be. And I was like, no, I don't think it is. It's the world's largest crypto exchange. And like, sure, we've seen, FTX have its downfall. We've seen other things like really fall from grace. And I don't think that really was kind of the catalyst. And, now we're kind of seeing like, okay, CZ was pardoned. And to your point, yes, it wasn't Binance was pardoned, but it still kind of goes to like the image that they're creating. And now I'm curious to see how this plays out for CZ in terms of like building in the US when he
Right. He
probably
even
was more cautious about it in the
Yeah,
past.
he even
If
said,
not,
he's like,
yeah.
We want to help make crypto or make America the crypto capital, right? He's aligning his
Right, right,
message
right.
really
He said
closely
some
with Trump.
variation of crypto in America.
Yeah, yeah.
Free,
And then there's
free,
the whole other
free
side
brand
of it.
for us. Yeah.
We could probably do a whole episode on this, but
Yeah.
obviously there's the whole other side of it, which
Yes.
is he, with the $2 billion investment with the Abu Dhabi, sovereign wealth fund and
Mhm.
Binance and tie up with World Liberty Financial, like Eric and Don Jr., like it gets messy, right? And I think we did talk about this on the live show, maybe like last week or the week before, but like, it kind of goes to that optics, right? And when Charlie reported this 2 weeks ago, he was like, the concern inside the White House about pardoning CZ mainly is the optics because of like the
Mm.
potential family connection. And like now this has given a lot of ammunition to Senate Democrats, right? Like Elizabeth Warren, Maxine Waters in the House,
Yeah.
and this is just another time. It's like, they're trying to negotiate market structure. It's just another sort of fly in the ointment when it comes to trying to like make crypto legitimate, right?
Y- yeah, I think it's really challenging on that aspect of like trying to get market structure done. I do think it's the public does have a pretty short memory on stuff like this. But just in terms of how many points of friction can you reduce, when you're trying to negotiate in good faith with another side, it's like this is definitely another point of friction. Elizabeth Warren's comments, for what it's worth, were like just way off base in terms of what this has to do with market structure itself.
Right.
But it is
Got
just
community
another one of
noted.
those things. Yeah.
Did you
Yeah.
see that? Her tweet got community noted because she said that, yeah, that he was charged with money laundering, and actually he wasn't charged with money laundering. So
Mhm.
she got the cone of shame, as we like to call it on crypto Twitter.
We'll see how it
Oh,
goes. And then, the
yeah.
last thing is just, does this mean SBF is coming back? Is
You
that
Our next segment.
Oh
yeah.
my God. Yeah, that would
I
just
hope
be
not. I think what SBF did was like way, I don't know, not way worse. I'm not going to compare the two situations, but I think what he did was extremely illegal and he's in jail for a reason. So you stay there.
Yeah.
You stay there.
You stay there, buddy. All right, let's get on to the open banking debate because the CFPB, there was a deadline this week on Tuesday for comments. The CFPB, the Consumer Financial Protection Bureau, received over 14,000 comments from bankers, from fintech companies, from crypto firms, even grocers, apparently, all weighing in on who should control Americans' financial information, their customer data. It's a big debate, Gerald. Crypto industry is heavily involved. They want to have their say here. It's kind of a debate, really, overall, if you look at the major players, it's JP Morgan versus, fintechs like Plaid, right? Even though they are sort of in an agreement right now. But crypto has a big stake in this too. Can you kind of just give us like a quick overview of your understanding of, why this matters for crypto in particular?
Yeah, so I think it's interesting to note a couple things. One is post financial crisis, how many few banks there are now. And so that's not the main story here, but just the consolidation that happened after the financial crisis. The banking industry has never really recovered from that. It's just gotten harder and harder under capital requirements and things like that to actually operate a bank in the United States. And so this debate in terms of like consumer protection, open banking, how this relates to crypto is, if we want to be able to operate on sort of legitimate rails, then it's kind of like what we talked to Waller about with this like skinny master. It's not the same issue, but it's kind of part of the same basket where essentially open banking is a product of kind of neobanking, which is APIs that allow you to access sort of traditional financial institutions. It's a product of like you mentioned, Plaid. It's been around for a long time. And so there's been this proliferation of what you would call non-bank financial institutions over the last like decade. I think where crypto fits into this is the argument is that we just want to do all the same things that we've been allowing these kind of neobanks and fintech players to do over the last few years. So it's an important kind of technological update to the system. I would also say what's interesting is like a lot of people don't like to frame it this way, especially like post GDPR in Europe, but Europe has actually always been quite ahead of the US in terms of implementing financial technology. I remember going back there in like 2007, 8 or something, and they already had RFID chips in their like debit cards, right? In the United States, we were just swiping. And so I think it's good to see this many comments and this much activity on something that looks as boring as a debate over whether or not you should be able to pull financial data through an API.
Yeah. Yeah. That's a good way of putting it. There's been a lot of those. I feel like with crypto, it's like you get into the weeds with this stuff and you actually make it sort of interesting in a public forum. I don't know, like the Senate, the archaic Senate rules, right? Like the cloture votes and the filibuster, 60 votes in the Senate. I feel like we all had a crash course in in government civics classes these past few months with all the bills being debated on the floor and that kind of stuff. So it's been really interesting. Stable coins. Let's get to the we can kind of lump these last two stories together. I feel like stable coins. A new report from A16Z Crypto came out and said the stablecoins processed $46 trillion in transactions over the past year. That's 3 times Visa's volume, and it's closing in on the ACH network that powers the US banking system. So kind of, that just goes to exactly what we've been talking about, what our conversation with Fed Governor Waller was about this past week. Like stablecoins really are here. They're here to stay. They've gone mainstream and they're catching up to, rival the payment rails of the banks, right? So I know.
I did not know they were bigger than
Wild.
Visa. And I mean, I don't really use PayPal, no offense, but I did not know they were bigger than Visa. That's crazy. There was
Mhm.
also the Visa report, speaking of Visa, that came out on the stablecoin front too, that basically goes into kind of like the size of the market as well. So it was a big week for stablecoins on that front. I think
Mhm.
in the Visa report, they said like the month, here's some stats from it. I mean, like the average loan size is over 75 grand. That's so
1
interesting,
million unique borrowers.
right? Like I would love to kind of, get like a pool or understanding of like a survey from all these borrowers or like the people who are borrowing these stablecoin loans opposed to going for like dollars. I think that's
Yeah.
kind of an interesting story here. And then it's also like in August of 2025, there was another chart that Visa had that said $51.7 billion in stablecoins were borrowed in just that month alone, which is just wild. I mean, it's up from like essentially nothing in January of the year prior and everything. So I think,
Yeah.
we'll continue to kind of see just there we go. It's like a hockey stick.
Yeah, no,
Up and to the
Everyone likes a
right.
good hockey stick chart, right?
Yeah.
yeah, no, it's been crazy to see the adoption. We've had discussions on our team about how quickly like SMBs would adopt something like this versus like the original sort of killer use case was like remittances and do people want this kind of instant settlement? I think ACH and anybody who's had to like process a wire in 2025 knows sort of how terrible the current rails are, even just going back to the conversation on open banking. So it'll be interesting to see. There's sort of this like, where is all the volume going to come from? Will we get sort of revisions to Genius via updates, whether it's through rulemaking or through market structure? And then like, where is all this demand going to come from? So it's clear there's demand there. But yeah, it's going to be interesting to see.
Yeah. I think the demand part too is kind of like two separate roads. Like in the US, it is to improve the financial rails. And then in emerging markets, it's literally to replace like deflationary currencies, right? Like I'm going to Argentina for DevCon, and I went there a year ago for the Avalanche Summit, actually.
Oh, you got in.
Yeah, for context, DevCon rejected my press pass, and then I tweeted about it, and now I'm getting a press pass. So sometimes complaining works. But yeah, so I just feel like in Argentina, you could actually see the need for stable coins, because like when you use a credit card, it literally upcharges you like 30 to 50%. And it's just crazy. Like you have no choice. Or you could give them cash, but then when you go take cash out at a bank, sometimes they charge you $50 to take out cash. And it's like, you don't experience these things in the US, right? But when you go into another emerging markets, suddenly you start to feel like, okay, there is actually a need for this in a different capacity than what we see the need for. And the two could coexist. But anyways, let's move on.
Yeah, well, we were going to talk about Fed and stablecoins and everything that we talked about with Fed Governor Waller, but I feel like this is probably a good point to bring in our first guest, Mo, because he was also there at the Payments Innovation Conference on Tuesday, and actually did not get a chance to say hi, Mo, so I have to apologize for that, but it's great to have you on the show. Welcome to Crypto in America Live. We're really excited to have you.
Yeah. Thanks for having me all. Yeah, it was a fun session at the Fed. Not something I would imagine saying last year.
I know, right? We said this in our interview too. Not just that, but there was a point where Governor Waller was talking about ZK proofs and how the Fed is actually doing research on that. And I said to him, it's like, that is not something you expect to hear out of a Fed governor, out of an economist. Like,
yeah, and he knew what he was talking about too. Like, I know he's very smart, but like talking about technical crypto terms is like big leg up from where we were in the past.
Yeah.
Shout out to Governor Waller's team. They prepped him well.
Yeah,
they prepped him well.
They got him going. Yeah. All right. Mo, you were the co-founder and CEO of Aptos Labs, and now you are the co-founder and general partner of Maximum Frequency Ventures. I kind of want to start on that note. What kind of motivated you from, building a layer one blockchain to launching a crypto venture fund? And how do you kind of view the American role in Web3 innovation today compared to when you started Aptos years ago?
Yeah, I think, Jackie, it's funny. Actually, Tuesday's conversation at the Federal Reserve is a great segue into why we created MFV. If you look at where the landscape was 3 years ago, you had companies really trying to figure out how to navigate markets, and markets not just in terms of products that they were building, but where those products live and who those users are. And unfortunately, a lot of those founders had to operate with a lot of uncertainty. And if you look at the landscape today, it's completely done a 180. To the federal, whether it's the Federal Reserve holding meetings, to the SEC issuing no action letters, I think America is leading at the forefront, has come to the forefront as a leader in crypto again, which is obviously an amazing thing as I sit here in New York. Now, what does that mean for founders? We quite frankly weren't sure. And when I was building Aptos, those founders that were building on our protocol, along with all the different ecosystems out there, we were hoping for them to be prepared for what's to come, ideally. And what came was something quite positive. And so founders are now shifting into the next gear if they were building already. Some of them are struggling. Some of them are doing a good job. However, what we largely believe in, whether it's the world of payments and stablecoins to capital markets, some of the biggest companies that will become dominant in this space have not yet started to build. And so MFV is positioned exactly to focus on those founders. We want to help them reach their maximum frequency. pun intended, of
Love
course.
it.
And having been in the space for a decade and building in the space, we know what it takes. And we want to bring that to founders so that they can accelerate, build, not only getting their product out of market, but then scaling their product. And so, where founders often get stuck navigating ambiguous markets, we come in and help them go not only 0 to 1, but 0 to scale.
So Mo, I think I have this right, but you guys obviously, I know your legal team came out of Libra and Diem, and you were there as well. So that was kind of the sort of the origin story. It seems like that project was essentially just a few years ahead of its time, right? It's like pets.com is like, I mean, not that Libra's pets.com, but like pets.com is just like Chewy with better rails, right? Is like, it's the exact same company. It seems like the time to be building something like that, and the work you guys are doing at Aptos is very sort of timely. How do you evaluate like whether it would be a better use of your time to be working with founders, building kind of on the outside, or being like back in the trenches, kind of bridging that gap that you started out to bridge like a decade ago?
Yeah, I mean, first of all, I wasn't expecting to be called pets.com, but I appreciate the. I appreciate
no, you're Chewy in this analogy.
We're Chewy. But I was also part of pets.com.
Yeah.
But the funny thing is, you kind of you say it really well though, right? Like we're in an environment where if you were building pets.com in an era where you couldn't get it to scale, Chewy, you're now responsible for building Chewy. I think the timing is perfect. And so, going back to your point, I think this is exactly where, having been in the trenches of building not only an L1, but an ecosystem where those products can live, and that requires, a protocol that's incredibly powerful. All those points are relevant today. Now, if you look at, obviously it's exciting to see where Tempo is headed. And, Paradigm was part of the Libra DM pets.com era. And so they know what worked and what didn't work. And so, you clearly see some of the win in the sales now of projects that, historically couldn't make it, now have a clear path to market. However, I do think there's a fair sense of criticism that the sort of corporate chains are getting. And so, we'll see how they come to market. But I think the most interesting thing will be how they position themselves in more of an open source environment, in a way that is collaborative with existing ecosystem projects, right? Being a hybrid permissionless network has proven to be very difficult. We've seen that in the days of the intranet, and everyone eventually shifting into, well, let's just use one protocol. And so I am kind of curious to see how Stripe and Robinhood and Arc sort of and all those projects evolve as some of these larger corporate chains.
Mo, what would you say your biggest takeaway from the Fed's event on Tuesday was, and some conversations that you were having? Maybe I feel like the Fed's tone shift has been pretty dramatic. Like you said, it's not often that we have an event at the Fed that's like interesting or kind of like innovative. Yeah. Right. But like, I guess kind of what was your biggest takeaway? Then also, like, how would you, I guess, advise founders to kind of position themselves to, prepare for what the Fed might be doing? I guess, we talked to Governor Waller about the skinny master accounts, right? And just the implementation of rails for stablecoins and tokenization and AI payments. Any advice? Yeah.
I mean, I think, there's a lot to sort of break down there. But if you look at skinny accounts and narrow banking, we can kind of come back to that one. But I think the biggest takeaway was, obviously, everyone's suit game has evolved significantly over the last 6 months. So that's applause to all of us in the space. But jokes aside, I think what I do think that was interesting is you heard everything around not only the experimentation that they're doing internally, but also now specific projects that the Federal Reserve either wants to launch or help support. And so it was a very friendly tone, complete turning point from things like choke point, right? And so it's been very positive. My takeaway, maybe not necessarily everyone's takeaway, is how many times did you hear the word blockchain or crypto or tokens? Not that many. I still heard digital ledger, distributed ledger technology, and digital assets. And so, while I'm incredibly optimistic for the shift in tone, there's still a gap, in my opinion, to bridge. And I think having everyone at the table 2 days ago in DC, or 3 days ago now, is still going to be important. And so, I think we have to continue to show up, continue to educate. And that's something obviously I'm excited about. And I'm looking forward to catching up with you in DC at some point as well.
Yeah, they're both in DC. I'm in New York. So next time you're here, we could hang out.
Well,
But yeah.
all right. Okay. We'll do it. We'll do a DC hangout.
Yeah. Okay, so Mo, I know you are expanding beyond like just the blockchain sector into different pockets, right? And so when you're talking with all these founders, what are really the most interesting sectors to you today, right? Because I'm curious now that you could kind of like, spread your wings and go into new areas and invest in cool founders. I know that Maximum Frequency Ventures has a focus in Asia, which is fine. We understand there's a good market out there, but I want to know, one, why Asia? And then two, what do you think about the US market that made you decide, we're going to focus there first, even though we'll probably invest here too. You know what I mean?
Yeah, I mean, half our team is in Asia. The other half is in the US. We also have portfolio companies split perfectly, actually, at the moment, within Asia and the US as well. And I'm talking about Asia as if it's its own country, but we're specifically focusing in East and Southeast Asia, where I think a lot of crypto activities, existed. And if you look at on that point of where crypto users exist today, they're kind of bifurcated in both Southeast and East Asia just as much as they are here in the US for different reasons, right? Maybe the dollar value of transactions might be higher or lower in different markets, but at the same time, the volume is incredibly aggressive in Asian countries. The innovation and the creativity that exists with founders globally now has been phenomenal. And we had firsthand exposure to that when we launched Aptos and got a chance to work with folks that are pushing the boundaries of everything from gaming to stablecoin payments for remittance use cases in these countries. They live those problems daily. They're on the receiving side of those payments and have a very clear problem that they would like to see solved. Obviously, a lot of those payments might be coming from the U.S. side, and there's a sender problem that we want to solve here in the Western world too. And so having this sort of dual world approach has been incredibly helpful, because founders that are building in the US now instantly get knowledge of what's valuable in Asian markets and vice versa. And it's not easy to just show up and have a product ready to go. I mean, and be able to integrate and penetrate these markets. I mean, look at products like WeChat, right? They never really make it here to the US. Consumer behavior is different, vice versa. And so what we do is kind of bridge that gap. And we see consumer behavior evolving significantly. What used to be, okay, I'm just used to this type of product in market A and a different type of UX in product B, that gap is closing significantly. And so this opens up a whole new opportunity for founders, and we want to help those founders materialize that market reach.
Mm-hmm. Do you find that the American innovation is coming back? Because I remember during the last cycle, even before this existing administration, a lot of founders, even if they were stateside, they were not building in the US. They were leaving literally and physically, or they were here, but then they had, their Cayman Islands operations or wherever they are. I don't know. No shade to them. Like, you got to do what you got to do. But now we start to see founders coming back, at least from my perspective, right? So do you feel that now that they're coming back, like America will kind of like lead the pack again, or are we still kind of losing ground to other countries?
I think that, again, the tone has shifted, right? So you are seeing U.S. founders that moved abroad come back. You see U.S. founders that have moved abroad spend more time here as well. And this year, obviously, we've seen two very interesting cases with Arthur Hayes and CZ, and I think it'd be great to have those guys spend more time in the U.S. as well. And so it's not just U.S. founders that either moved and are moving back, but also a lot of founders that were just in other markets that didn't have access to the US. And I think what we've seen with under President Trump is a lot of that sort of outflow is not only coming back, but new founders that typically would not come into the market that are based in other countries are coming in. So that's leading to a whole sort of slew of innovation that I'm very excited about, that our team is incredibly excited about and investing in. And it's going to be pretty disruptive when you think about product ideas coming to the space. Specifically, I mean, take a look at how centralized exchanges operated or decentralized exchanges operated. They did not necessarily have the access to US users. Now, I think that it's going to change very quickly. And so how does someone like Coinbase stay relevant in a market that competition is going to increase because we're back to being innovative and open again here in America.
Yeah, Mo, how many of your founders or, the people that you speak to are really focusing on clarity, right? Getting clarity from the Clarity Act, so aptly named. You really think that that's going to have, a big maybe inflow effect of founders coming back to the US or just having more confidence to start building here again?
Absolutely. It's taking trips to the U.S.
Sorry.
Ellie really liked that one. Yeah.
Alert. Great answer. Alert.
Alert. All right, go ahead, Mo. Sorry.
I was going to say that's a
Live.
maximum
Yeah.
frequency in taken physically.
IRL, yeah.
I love it. Okay, so the question is just like founders kind of a bit building in the U.S. again, right? Or coming to the U.S.
Yeah,
The answer is
Clarity Act and
does
everything.
clarity have an impact on where your founders are deciding to work? Yeah.
well, both clarity in the market and then Clarity Act, hopefully that passes or market structure bill passing as well. And so the answer is absolutely. And I think if you look at even the Genius Act and we're obviously seeing clarity and market structure play out live. I think the exciting thing for us to all think about is going back to the days of how the Securities Act of the early 1900s paved the way for retail investors to participate with transparency. You couldn't, funny enough, you couldn't buy shares if you were interested in getting some economic upside and saw, public companies. The Securities Act obviously changed that. Similarly, the way we look at Genius Act and of course, market structure coming up, I think that's going to pave the way for a lot more clarity or certainty for founders, not only wanting to build here in the US, but be able to allow to get exposure to, the most robust capital markets that exist in the world. And that I think is something that founders are incredibly excited about and have been excited about for, the last 100 years or so. And so there's so many reasons for founders that are, not here in the US, Eleanor, based on the clarity or the Clarity Act to come here and build in the US.
Yeah, they were good with that. They were creative with that name, right? Because you just can't stop, using that term, right? When you talk about clarity and then you talk about the bill, sort of inherently.
Ellie,
But
where'd the ringing go?
I don't know. That was
the
the
maximum
weirdest thing.
frequency. Give it back.
The spiral went off for like 5 seconds. Oh my
Yeah.
god. Anyway,
So
over to you, Gerald.
No, I want to ask on that kind of like product design perspective, right? Because you mentioned WeChat earlier, and I've always thought it was really interesting. But like previous to crypto, I was in like fintech, and the sort of joke about WeChat was that because of like Silken Road and the larger Asian market, what was happening was sort of the money was never actually leaving China. Like it was essentially like a Chinese traveler goes to Thailand, they spend on WeChat, and it's basically just a transfer to an owner. Basically what I'm saying is super apps, can create very like closed systems. And in the US, even just from like a regulatory perspective, that was never really possible. But then you have Chair Atkins coming out in sort of the, make tokenization great speech and talking about super apps and things like that. I think we're seeing Coinbase move towards that with some of the stuff they're doing. Do you think that there will be a sort of like winner in the US? I mean, Robinhood has talked about having sort of the everything trading app. Or do you think that, there's always this debate when you get regulatory clarity about whether it's creating barriers to entry or more competition, right? And so how do you see that playing out?
This is like a 5-hour long discussion.
Maybe we'll do a separate episode on this.
It's there's so many like great points that you brought up, right? So, I mean, one of US's superpowers was the fact that we embraced open systems, and that sort of open system approach has allowed for many folks across the world to be able to tap into what we're building here, and that's created obviously massive opportunity for founders and companies that have built here in the US. Fintech was a clear beneficiary as an industry as part of that when they moved when companies that allowed for movement of US dollar through remittances, of course, and we all know the names of Remitly, Western Union, and MoneyGram and whatnot, that sort of kind of paved that way. Other countries have taken more of a closed approach, and it is a hard sort of it's more of a cultural perspective that I think some of these folks take, and they all have their reasons behind it. But I think the way we're positioning, or America is sort of repositioning itself when it comes to crypto, it allows us to take advantage of how fintech will become open source again. And there are some nuances to your point, right? Like Robinhood, for example, building a protocol. Does that mean if you're sitting in London, you can KYC and buy Apple shares on Robinhood? So far, you still can't do that. You have to still work with within your jurisdiction's products. However, there are new forms and new ways that you might be able to get access to Apple stock exposure directly. Similarly, you might be able to get exposure to other assets. They may not be listed as depository receipts on the London Stock Exchange. And so there's a lot of details here that we can go into. So the point I'm trying to make is, yes, we are now creating these open rails. The products, however, that sit on these rails may still face a barrier as a function of the country, of those citizens that are operating outside of the walls of the U.S. And so, however, we are seeing collaboration. We are seeing coordination among regulators and all the relevant industry participants. So if we have standards, if we have regulation that sort of allows for this permission, that would be an amazing opportunity for someone like Robinhood to tap into markets that typically were not accessible. And so, a long way of sort of answering your question. Yes, I do think that there is an amazing opportunity for American fintech to tap into markets that they typically don't have exposure to. The last point that I'll kind of end on is, it's also very fascinating that you touched on this point. Crypto and fintech are sort of converging into this new industry. And that, I think, is going to be very exciting to sort of see play out in the next 12 months or so.
Yeah, Mo, we're going to have to bring you on for a follow-up episode because you're going to have to talk to us for 5 hours like you said you would. But we appreciate you coming on. And yeah, this is probably one of many times. So thank you.
Yeah,
thank you, everyone.
Looking forward to continuing the discussion, and yeah, thank you.
Alrighty, well, let's tee up our next guest. We have Adam Minehardt, who is the head of public policy at Chainlink Labs. Adam's first time on the show, so welcome to Crypto in America. We are super excited to have you. I think he's ready to go. Yes, there he is.
Let's party.
Hello.
Hey, all. Thanks for having me.
Thanks for coming.
Of course. Thanks for coming on. We're really excited to kind of get into the details of what went down this week on the Hill. You have a very interesting perspective because you actually worked on Capitol Hill for about 15 years, I believe. You were a staff director and you worked for maybe one or two Congress people in your time on the Hill. But what's fascinating to me is that, we've kind of seen the backroom dynamics of sort of like what goes into like making the sauce, right, of these bills, with staffer negotiations kind of behind the scenes, like really play out on the public stage in the last 2 weeks. So I'm curious to know, from your work on the Hill, is this all sort of like par for the course, like all this kind of like backroom drama that goes on? Is this just DC?
It is very much par for the course. I'd say the process is meant to be difficult. That's the design of it. You have a House, a Senate, a White House, multiple parties, committees. The competition for jurisdiction and kind of mind share is so significant. The process, even when you do control all three, you control the House, the Senate, and the White House, it's just tough. It's tough to get anything through. And we're seeing that now. I think what's a little bit different with crypto is that the administration has embraced it. You do have Republicans controlling all, the House, the Senate, and the White House. And there's a certain kind of entertainment value for kind of watching the industry. So I think that's put a real laser focus on it. But yes, definitely par for the course, but maybe a little more kind of entertaining, a little more entertainment value just given all the characters.
Yeah, I love that. A high ratings administration is what we're going with. Yeah. No, I think, Adam, to your point, great to see you. On the controlling all three branches or all three. Yeah. I guess, all three branches. Yeah. You still need some support, right? To get things through. And so I think on the Senate side, where is it 7 Dems short, kind of more or less. And so those, I I don't think anybody's come up with a catchy name for them yet. We need to maybe
Yeah.
figure that out at
The
some
Mag
point.
7? No?
But yeah,
Yeah.
something like that. Yeah.
Just name.
Well, so there's been a lot of, I guess, sort of kerfuffle over the last couple of weeks about Dem support on maybe even issues that they previously did support, and kind of wavering or being very loudly opposed to issues that hadn't fully been discussed yet. And so you were kind of part of those discussions. Can you just give us a bit of background on like where do you think some of that is coming from, and then how do you think we move forward here?
Definitely. I think one big takeaway from all of this, if you look at the Democrats, it's not monolithic. There's a big range of perspectives on crypto, on financial regulation, and I think that's really what we're seeing. You have members like Kirsten Gillibrand in the Senate, Richie Torres in the House, who are very much pro-industry, pro-regulation, I think in a very smart way. But then the range runs all the way to those who are adamantly opposed to any sort of regulatory endorsement of the industry. And really, the fight here to get to 60 in the Senate is really about the middle. So I think what we're learning is where that middle is. Are they closer to, say, getting to yes, or are they closer to going to no? And we're really seeing that fight play out now really in a very public manner with the meetings we had this week. So I think what we're learning is that there's several key issues that Democrats are prioritizing. One is illicit finance broadly. It can be with regard to DeFi or just the nexus to digital assets more broadly. The ethics issue came up in the meetings as well. And then finally, this idea of financial inclusion. Never a top issue, but that was brought up by 3 Democratic senators out of 10 in the meeting. So I think what we did learn is definitely a spectrum of viewpoints on the Dem side, and what issues are really starting to get teased out.
Mhm. As we could see here on this list that Eleanor posted prior to the event, because she's always got the scoops, that your CEO was there, Sergey Nazarov. We've had him on the podcast on the Wednesday show, not the live stream yet. He's welcome to. But essentially, like when Sergey goes to DC, I would love to know kind of from your perspective, because you're probably there as well with him, right?
Yeah.
Like, what is the key things you guys are trying to get done? Or is it really just a different objective every time over the same broader picture? Because it's probably like the big umbrella of like, let's move this forward. But then like with this situation, right, was there specific agendas or themes that you really wanted to hone in on?
For us, our participation both in the Democratic meeting and the Republican meeting was really to continue to show that the industry is very much in support to getting to a place where we have a bill. So I think it's showing that leaders in the industry very much still prioritize getting market structure legislation done. I'd say that's the big 35,000 foot level point. I think when you get into some of these issues, it gets very complicated very quickly. And I think, for most of us, we want to see a framework that's clear, that industry can comply with, but that also consumers can comply with. And to Mo's point in the prior segment, I think our hope as an industry is really that a lot of this regulation unlocks more economic development in the industry and unlocks more consumers coming into it. So I think that's the kind of 35,000 foot level, and kind of drilling down a little bit more into the nuances of it.
Yeah, Adam, I'm curious. Yeah, there we see Sergey live doing his thing, DC. I think I've seen him in a suit, I think, more times in the last 2 months than maybe the last 6 years. But no, it's great to see you guys being part of those conversations. You mentioned, I know conflict of interest has come up before as like kind of a strong talking point. There's been other kind of points around DeFi and AML that seem to be sort of impasses, right? You alluded to Dems not being monolithic. Our industry is also not monolithic.
Yep.
Do you have any insights you can share on where you think there's like give and take either on the industry side or on the it is a bipartisan issue, but it does seem like it's being hung up, majority by the Senate Dems right now. Like, where do you see the sort of lines in the sand being drawn, and do you think we can get any kind of movement there that gets us across?
Yeah, I think the lines in the sand. I think DeFi.
There it is again. Excellent answer.
Yeah, I said the word DeFi. That was
He didn't like
perfect
that.
timing.
Yeah.
I think DeFi continues to come up. I think the important issue there, I think, is ensuring developers have the protections from prosecution. That clearly is a red line. DeFi Education Fund did a letter. Most of us in industry signed on to that. So I think clearly that's going to be something that's not going to be compromised on that front. I do think when you look at illicit finance, we do have to look more broadly at areas that could come into the discussion, whether it be how to get at things like pig butchering, crypto ATMs, other areas that have a clear consumer nexus to these discussion points. I think those are areas that potentially could be scoped in more broadly that don't topple the apple cart on DeFi. I think with regard to the conflicts of interest, I think that's going to probably be one of the most challenging points. It was raised in the Democratic room. There was some discussion about it. It feels like a very difficult issue to address. And I think if a core group of Democratic senators hold on to that as a red line, it's going to be very difficult to get 7, 8, 9, depending where things shake out. Potentially, you could lose a couple Republicans here on the bank side of the issue here with the yield discussion. So unclear if the ethics conflicts issue is a 1 or 2 senator issue, or if it is a red line for, say, 5 or 6. So I think that's shaping up right now. So I think TBD on the conflicts of interest. It wasn't raised broadly in the meeting in terms of senators. So that leads me to believe it may be something that could be potentially left out or dealt with in maybe a softer way.
Yeah, I'm curious. I know. I think if there was a poly market on it, crypto folks in DC will continue to be busy well into the next year. It sounds like. But going into next year, I am curious because what I'm kind of hearing, and what I think Eleanor and Jackie are hearing out there is, there doesn't seem to be a clear end in sight for the shutdown. Yeah. So we'll see if I know there's also optimism from the administration that we're going to get a vote before the end of the year. So I'm not quite sure how those two things coexist. And then obviously going into 2026, we're in midterm season and we start the whole thing over, right? Like where do you think all that goes?
I agree with you completely. I mean, the shutdown hangs over all of this. And as people noted, there's very raw feelings at the macro level in DC on the shutdown. I think you add to that the fact that there's no Democrats have been discussed to be nominated at the SEC or CFTC. That kind of adds another kind of obvious procedural issue that Democrats can raise. So those things lead me to believe that just the atmosphere makes it really hard to get something done in the near term. I know the Republicans do want a timeline. I don't blame them. As you all know, putting timelines on things in DC, it's like it never happens. Like there've been timelines on appropriations every year.
Yeah.
And it's like a jinx.
They're blown through. We blow through them constantly.
Mm-hmm.
So it is tricky. I take the view that there is a much longer time horizon on this than just this year. I think this could go well into next year. I know people talk about it being a midterm year. Members are still here. They might be there might be a longer August recess next year. October they might be out, but for the most part they're here and they can focus on this. And in some ways, being a midterm year, it could focus them more on getting something done. So I think there is a longer tail on this potentially into next year. I am still of the mindset that it's more likely to be done than not, but it really depends on that spectrum of democratic views here. Can you get 7 or 8? In there is a world in which you have a better vote on the floor than you do in the committee. Maybe you get 1, 2, maybe you get none on the committee, but you could get 7 or 8 on the floor, depending on the political moment next year. So lots of uncertainty, lots of three-dimensional chess to be played here.
You mentioned the ethics issues, Adam, before my smoke alarm rudely interrupted us. But curious, that was a couple days ago. We just got the news about the CZ pardon yesterday.
Yeah.
Sparked a whole lot of criticism from folks like Senator Elizabeth Warren and Maxine Waters. I mean, how much do you think that might affect, the hard line here when it comes to Dems really driving home the ethics clauses?
Totally. I mean, for starters, I will say CZ and Binance were really the focal point of the Biden administration's kind of war on the illicit finance portion of it. And I think it is a great point that you have many in TradFi who have been cited and paid hundreds of millions in fines, and no single person went to jail. It is a very fair point to make. That said, we are already seeing Democrats beyond center left make this a big issue and really connect it to that illicit finance portion of the market structure debate. It's going to be there. Sam Bankman-Fried was there. That was a major flashpoint when FTX came up on this. I think anything negative about crypto execs will be used to hamper progress on market structure. And to me, it's really sad because in many ways, these bills are at their core consumer protection bills. They're really, truthfully, putting guardrails on the industry. So I do think it's a little disappointing that things are used that way. I mean, the Genius Act at its core is a consumer protection bill, making sure a stablecoin is backed in a way that protects consumers. Market structure will make sure exchanges, brokers are regulated in a safe and sound way. So it's unfortunate, but it's going to be used by those that want to stop this.
Yeah. And I feel like with the CZ story, you've got two, right? You've got the illicit finance angle because of what Binance was charged with. You've also got the ethics with the potential connections to the Trump family. So you've got sort of a double whammy there.
It's a twofer. It's definitely a
twofer. To wrap up, Adam, I do want to ask you, so a couple of folks I spoke to, after the roundtables on Wednesday said, there's more bipartisan consensus and there's more sort of kumbaya there than, maybe is being portrayed. I heard the number 90% there thrown around a couple times. I believe Brian Armstrong said that. Do you align with that? Or do you think 90% there is an accurate assessment of the situation?
I think it's hopium, I think is a word that I think it's a very optimistic wrapper of the view of it. I think, as we know, creatures of DC, things that are said in these very public rooms are often different from the reality. I think the reality is it's still a hard hill to climb here to get 7 or 8 Democrats on board at this point, with all those things hanging over this. I will say, though, the one thing, and actually think it's probably the most important thing from this week, is that Senator Schumer has entered this in a very powerful and meaningful way. He kicked off the meeting. That was very symbolically important to show the 10 Democratic senators that he's there and he's listening. And he met with many of us separately, and he told us he wants a bill. So I think his entry does put my hopium maybe above 50%, but maybe not much more.
50?
Okay, so somewhere between 50 and 90.
Exactly.
Yeah.
Awesome. Well, Adam, this was great. Thank you so much for coming on the show. We'd love to have you back. And give us, come back and give us an update. Hopefully there's good news.
Yep.
Adam.
I really appreciate you having me on. Thank you so much.
Yeah, great to see you.
Have a great weekend.
Thanks.
All right, team.
All right, guys. Team, we took us to the top of the hour.
Another one on the books.
The hopium.
The hopium. It makes me think of like that Pepe meme where he has like the mask of the hopium tank. Have you guys seen that?
Yes.
Okay.
Wow. Deep
No.
cut.
I'm like
Yeah.
deep in the meme world.
It's okay. I'm sure somebody has already
That's
tagged
a
you in
real
that.
crypto Twitter meme. 100%.
Yeah.
Yeah. All
Yeah.
right. Well,
Well, shout out to our wow, 6,500 viewers today. And I just want to give a shout out. We on Twitter, on our Crypto in America Twitter account, or X, whatever you want to call it. I still call it Twitter. We hit 15,000 followers today. So thank you guys so much. We launched in March, and it's been such a, it's been an incredible journey, the three of us, to, launch this product and bring
exactly.
you. Yeah.
Thank you, Havoc Actual. Let's fucking
Love it.
go.
That soundbite will live
Exactly.
forever. Oh goodness, what soundbite?
Oh,
You know
Exactly.
nothing about nothing, you fake me. Oh goodness, I know. Poor
the
Caitlin Collins.
comments. We love the comments. We love
We
our
love the
viewers. We
comments.
love the
Keep them
comments.
coming, people.
All right.
All right, y'all. Have a great weekend. We'll see you same time, same place next week.
Yeah. See ya.
Crypto America
Thanks,
Live
guys.
out.